everyone, and welcome to this episode of the Semoto podcast. Today with us we have Björn Wahlström from Coren Consulting Group in Hong Kong, right, Björn? Am I correct?
That's correct, sir. I'm in Hong Kong. It's a pleasure to be here, Mark.
Welcome. Thanks for taking the time. So, Björn, tell us more about Coren Consulting. What do you guys do?
So, Current Consulting is a risk management firm here in Asia. I've been around Asia myself since 2001, about 10 years in China, and then the latter 10 in Hong Kong. So I worked for a lot of years as a private investigator in China, and that's part of the services that we now offer, although we've developed into something more regional, right? But at the core of what we do is there's a standard set of risk management skills that are needed in the market. It's the due diligence side of things. So, helping clients avoid getting into business with the wrong actors, helping arrive at a correct assessment of who the counterparty is or what the value of an investment might be. And then there's the other side, which is the investigative side and the recovery side. So helping clients when something's already gone wrong or horribly wrong, in understanding the situation, in mitigating the situation, recovering funds. We get involved in physical security type work as well, in risk assessment and crisis management. And there's obviously some overlap between all of these, but in a nutshell, that's what we're about. We're based in Hong Kong, but we're a regional firm, so we're comfortable operating up and down Asia, from Korea, China, all the way down through to Indonesia, Malaysia. We also operate in Dubai and in the US, and we're comfortable with global cases, though we're an Asia-centered company.
I would like to dig deeper into the two parts of the business, because obviously the asset tracing is extremely interesting for our audience, but I want to know more about the risk assessment of the people that you do business with. But before that, let me say, extremely fascinating. That is beautiful. I don't think we've ever had anybody on the podcast doing that. So, switching into what the company does in the specific, let's leave the investigation part for now. Or specifically in Web3, what you guys do for companies that you define as risk mitigation? Is it almost KYC on the clients, risk assessment on the people that you do business? Tell us more about that.
I mean, the basics of that, the approach to that work is helping client match risk to their appetite for risk, and a lot of the time, clients can come to us with the notion of what they want to do, but maybe only a vague idea of where the risks might be. They might have only a yes/no mindset. So if it's commercially interesting, I'm going to go ahead and do whatever it might be. So an acquisition of a company, or a joint venture perhaps, or a larger multi-year contract. The truth is, in Asia and really anywhere in the world, you should go into any business venture accepting that you'll be taking on risk as part of those agreements. And you should try and have an understanding of what those risks are, both in terms of severity of potential impact and what that potential impact might be, and what the odds are for those things to come true. All right. I mean, it's really interesting work in Asia to try and guide clients in Asia to how to take that approach to a deal. And a lot of our clients have an expressed appetite for risk, so they want to have big returns. They are in lines of business that are perhaps bullish. Crypto is a good example of that, where the market's up and up. It's full of people who are willing to make investments, have a lot of money. And they're willing to take risks, but even so, you should be aware of what those risks are. And that's a fairly typical array of items where KYC is one part. So basically just knowing who you're dealing with and gathering a set of documents to verify that. But there's other things you can do as well, like to increase your level of comfort. Face-to-face meetings and inspecting objects or facilities in person is another, and meeting people in person is yet another thing. I mean, all of that serves potentially to mitigate, to understand and mitigate your risks. So, I mean, the two parts that we do there is helping the client, guide the client through that kind of assessment, and then help them execute the steps that we recommend in how to match the risk mitigation with their appetite for risk.
I really like it, because one of the things that we see more and more, obviously, in Web3, due to the nature of the business being fully decentralized and all of this, sometimes there is a risk element connected to scam, but also connected to the fact that there is no interaction. Sometimes you say, who are you dealing with? So this is when current consulting can step in and add clarity. I come from traditional finance, so it's not just about KYC, it's a full due diligence on the people involved on a deal. I'm sure you're aware of systems like World Check, that it gives you color if a person is a PEP, a politically exposed person, or if there are information around this person that should raise red flags and prevent you to do business with. We are lacking those information in Web3. And when it comes to large deals, it can be OTC, or it can be merger and acquisition, as you mentioned. Then is where I assume you guys step in and you can really assess who I might do business with. Am I correct?
Yeah, 100%, right? And then there's the basic framework of understanding that you should have to satisfy whatever your appetite for risk in that deal is. But then there's also what type of information is adequate to gather. So there's the public source stuff, so the stuff that's available through public records, in newspapers, perhaps from the regulator. But then there's the other stuff that's harder to get to, which we also work with. So human sources being perhaps the first and foremost, right? So you're looking to engage with someone over a high value proposition or a purchase. You might want to find and interview people who have done business before with that person. So this is another layer that we provide, and it's very interesting work in Asia.
I can imagine. And I guess the jurisdiction is not that important at that point. I mean, it's applicable to pretty much any jurisdiction. Would you like to, without obviously mentioning any specific name, but would you like to give us some example of work that you have done in Web3, particularly on the risk assessment?
I mean, one thing maybe on Web3 and payments worth taking into account is it's just the global nature of that industry and how fast the tech has evolved, right? So I mean, it's super important to not make assumptions about how your money is going to flow in Web3. So a lot of the time, the narrative that our clients would be presented with a specific solution that might be, we've seen a few based out of South Africa. It's a great hub for fintech and a lot of innovative companies. So the solution that's presented might be centered around one jurisdiction like that, take South Africa. But once you start digging into how the money is actually going to flow through this solution, you start finding layers and layers of other jurisdictions and other companies involved, so outside of that core jurisdiction. So Web3 and new payment technology can be really, really deceptive in being very simple and offering simplicity as a selling point. Whereas once you dig into the mechanics of the solution, and a lot of people don't, all right? But once you dig into it, there's more under the surface than you'd find in any traditional bank. So what actually presents itself as a very simple box is hugely complex and might lead you to places where you had no intention of doing business. In the South African case, that solution ended up having ties, and part of the funds were being routed through Nigeria, Ghana, and Zambia. And none of this was intended, and none of this is what our client wanted. But we did a few test transactions, and we're able to figure out that the way it operates really isn't the way it was described to our client.
Interesting. Thanks for that. So moving on to the asset recovery part. Tell us what it means in Web3. So the investigation angle, guide us through the journey of tracing assets back.
I mean, asset recovery as a core service usually oftentimes comes as a question mark as to where did my assets end up in this complex transaction, and was there something committed against me that I should be aware of, or was it lost as a part of legitimate business operations, right? So what I'm trying to illustrate there is we're often presented with the question, what happened, and where did my funds end up? This is fairly similar. This is fairly typical in traditional disputes over assets and asset recovery, but it's basically always the starting point in Web3 and crypto-based solutions. All right. This is sometimes intentional. So we see a lot of fraud where the fraudulent gangs will intentionally lay out layers of deception in their communications and in the way that money is routed, so as to make it difficult for the investigators. But quite frankly, also legitimate companies in that space have a lot of trouble keeping proper records. We've seen it in a few of the more high-profile crypto cases that have kind of blown up and had all their corporate and financial dealings then presented to the world through media and through court records, right? A lot of legit actors in Web3 just struggle to keep good books, and struggle after there's been an incident. They struggle to forensically just reconstruct what happened and in which direction did our funds, our tokens, or our crypto disappear, right? So this is typically the first. So you're asking me for the sequence of asset recovery. A big chunk in Web3 and in crypto is just helping our clients reconstruct what an event was. So it entails forensic work, but also a lot of traditional investigative work on corporate files. So reviewing who had authority to approve transactions in or out of an account, review transaction logs, and review WhatsApp communications, email communications, and just piece together the events one by one. Right.
That is great. And thanks.
This is a red thread.
Because what I wanted to add on that is we have experienced it directly with clients coming to Semoto. People associate the asset recovery of crypto assets as simply tracing transaction on the blockchain from point A to point B using some tools. And there is definitely an element, a big element of on-chain analytics. Myself, I was working for one of the large provider of data analytic tools, so I know how it works myself, but thanks for explaining that, because there is way more attached to it. There is exactly the element of complexity of how human interacts, what is a company doing to obfuscate some transaction. So this is where you guys step in. So it's both on-chain and off-chain investigation, right?
It's a bit of a misconception that as soon as you involve blockchain-based technology, the wrong assumption is that everything becomes about the blockchain. Where, I mean, the true picture, in my view, and from the point of view of our work experience, is that there's a specific position for the technical analysis in the blockchain-based investigation, which is super important. But it needs to be put within a framework of a full investigation, which often includes a lot of much more traditional investigative methods, and a lot of the traditional corporate investigative stuff that have really nothing to do with the blockchain. But it involves corporate stuff like who has access to what, who gave instructions to make what transactions. And the other element to that, which is also sometimes forgotten in favor of the blockchain-based analysis, is that all the work that you do as an investigator in asset recovery should be aimed at being presentable to a court of law. So the forensic part is just one bit, but whatever you do on the blockchain, so the forensic trace report, needs to be presented in a context that the court's willing to accept in order to grant you or grant the client the order or the judgment that you're looking for, right? So there's more to it than the forensic bit.
No, I agree, and actually thanks for mentioning that, because one of the points that we always emphasize at Semoto is the collaboration between multiple players is what can bring a case to success. It doesn't matter if it's the launch of a token or an asset recovery piece. You need to prepare a case that can be used by a lawyer with expertise. A lawyer with expertise has to rely on an investigator like yourself. So the community angle for us at Semoto is extremely important, and this is why people like yourself are valuable member, because lawyers themselves, they can use you to complete an investigation. Okay, let's move on to again, if you can, maybe give us some color on some interesting case that you have work on, so we can understand as well how how scammers operate.
But I can give a few outlines of cases we've seen in the last few years. The fraud cases now, and fraud and deception cases, has been unfortunately on the steady rise for the last few years, and after COVID, that basically exploded across basically all regions of the world. From the fraudulent gangs point of view, that became an extremely lucrative business, because people were cooped up. Police and law enforcement and governments were preoccupied by COVID-related matters and other larger matters. And on top of that, there was this new technology that was just maturing enough to get people to engage with it, which is crypto then, right? One mechanics that maybe not so often talked about is how we see fraudulent gangs teach their victims how to use crypto for the first time. It would be funny if it wasn't so tragic when the outcome's taken into account. But we've seen cases where, when we review the initial logs of where the gangs are building trust with a victim in a romance scam or a pig butchering scam or a scam along those lines, they can spend weeks and sometimes months in just teaching the victim. So once the trust is established, an element of investing and an opportunity is presented, and then the victim needs to be taught how to use crypto effectively enough to transfer large amount of money into crypto. And it's complicated. I mean, if you ever tried to teach a friend who doesn't know anything about crypto how to buy their first Bitcoin, it takes time, and there's huge resistance with people who don't come naturally to crypto themselves, right? What's interesting there is that fraudulent gangs have gotten pretty good at it, and they come with full-on manuals and screenshots and directions for all major platforms, and how to interact between banks and platforms, and how to cross-wire security checks between banks and crypto. So how to make sure that funds don't get stuck in the middle. And they have all that sort of figured out. So on the fraudsters desk manual, there's a section in how to handle all these things that regular crypto users also sometimes struggle with. Specifically, they're very apt at dealing with the safeguards that exchanges put in place. So when you try and if you set up an account a fresh account on an exchange, You transfer funds in, and you immediately the next day try and transfer a large amount out to a new address. The exchange will freeze that. You spent years as one of the major providers that deal exactly with that kind of safeguard and trying to provide monitoring that guards against that. So what will happen is the exchange will then get in touch with the user and say you're about to do something that puts you at risk of fraud. The fraudsters will provide exact language that the victim, they want the victim to use to the exchange to get them to approve it so that it gets past the filters. And it works, and they know what they're doing, and they're obviously very well informed as to what these mechanics are.
Well, that's concerning. Obviously, we are quite active as a company via multiple social media to engage with projects, to understand how we can help them. So we monitor chats, we are on Telegram, we are on Discord, we are on Twitter. So we see firsthand a lot of people complaining about scammers. And it always fascinates me in a really sad way how inventive these people are. Exactly what you just present us is incredible. The effort that they put in educating and nurturing their own victims. But every quarter there seems to be something new. The latest that we have noticed more and more, particularly on large Telegram groups, are people infiltrating, using the excuse to lure projects in of we are VCs, we are investors, get in touch with us, we like what you're doing, let's set up a call. And instead of sending a legit Calendly or Zoom meeting, whatever, is some unknown app that hacks your system and steals your assets. So we really see new scams popping up on the radar almost every month. In your experience, I mean, what is the most common scam, or what is the one that is going is growing the most recently?
I think various forms of the pig butchering scam probably takes the price when it comes at when we're talking about scams directed at individuals. The pig butchering scam is interesting because it's really an old form of a deception fraud, which has taken on new life in crypto. It's become much more efficient for the scammers when it moved to crypto. So the whole need then for them, the greatest advantage is that you can remove the whole need to set up company structures and corporate bank accounts for the sake of credibility, and instead you can set up 10, 15, 500 addresses literally within seconds. I mean, you can set up algorithms that set up these addresses for you. When it comes to corporate fraud, I think ransomware attacks is one that should be mentioned in Asia. Whether or not it's the most common one, I'll leave for someone else to say. But it's certainly one we see on the rise here, perpetrated against Western companies, but also within China against Chinese companies. It's across the board, really. It's that's developing. A lot of the time, that's driven by locations that we'd consider unhealthy regions. So we see a lot of Russia, we see North Korea, we see Iranian gangs, and through the ransomware, the ransom is demanded in crypto. All right. The art there for the investigator, and our challenge is often twofold. So one is engage with the ransomware gang and negotiate the release of funds, or negotiate the funds demanded for the release, while simultaneously work on options to release or recover the funds if the ransomware isn't paid. Unfortunately, I mean, I can't go into too much detail here, but the standards of encryption used here is oftentimes hard to break. There's often solutions to recover and reconstruct files, sometimes without paying, sometimes a combination of both. But they're often devastating blows to companies, and it's just something that, I mean, it can risk putting a company or a regional office of a company out of business if you're shut down for a week, 2 weeks, 3 weeks. It can be, and we've seen that happen too. It's just it's an extinction event when it happens.
On that note, and by the way, I appreciate what you said about the fact that the scams are per se are nothing new. They're just using a different piece of technology, because we have experienced it with dealing with your company, dealing with some of your competitors, but the story is always the same. The technology is new, but the scam, the method that these people use are nothing new. They're not reinventing the wheel. Actually, the most common one seems to be really basic scam around manipulating people, and nothing more than that.
Right.
What I wanted to two of the main points that always come out when dealing with these type of investigations are clients' concerns related to two things. Sometimes there is kind of a barrier to entrance, meaning that if not enough assets have been stolen, sometimes it doesn't even make sense to run an investigation, because there are costs obviously involved, not just the investigator per se, the legal part as well. So do you feel like there is a point where unfortunately doesn't make sense to run assets that have been stolen, and if so, how can we lower that barrier?
Yeah, that's a very good question, and it's absolutely true. Some cases are very hard to successfully pursue because of the amount involved. We end up taking a lot of the individual cases that come to us at a heavily reduced fee for the initial trace work, and the reason for that is there's several reasons why it's important to get an understanding of the event and understanding of the chances of recovery, and all of this is before a legal firm is engaged, right? So, or at least before legal action is taken. A scam has damages. Now again, we're talking about scams perpetrated against individuals more than anything. Right? A scam has several damaging effects, where the victim's personal finances is one of them. It oftentimes affects also the economy of family members, spouses, relatives, and sometimes their companies. Some people lose take out second, third mortgages in order to put more money into scams. The victims often left also with a complete lack of trust. I mean, a scam is an abuse in the true sense of that word. Like, it's a psychologically damaging event. One of the things that anyone falls victim to that needs to do, and we see this on a human level, is to get an understanding of who were the people involved in perpetrating this against me, and what were the mechanics, and kind of lay that out in a cold forensic way on the table. This is what you fell victim to, and these were the techniques they used. These are the types of gangs that we see here in the background through our forensic report. These are the jurisdictions that were involved, and then at the end of it, when it comes to our initial investigators report, there might be an assessment of what methods you can consider to recover your funds. And that's where the real financial barrier often comes in, right? Because it becomes very expensive very quickly when you engage law firms. So if you find funds, that your funds, after a couple of hops, perhaps your crypto landed in the account of a big exchange, where it potentially could be, you could, through a law firm or through police involvement, you might try and freeze that account and recover it. You're immediately looking at, I don't want to say a number here, but you're immediately looking at 5 figures US dollars to start to complete that initial freeze order and start clawing back funds. And then at some point, I mean, every victim of a scam then needs to make an assessment of 2 things. So how much money am I willing to put, how much good money am I willing to put up here to have a chance at recovering the money already lost? And the other really super important element is to ask yourself, how much time and emotion should I be investing behind this event, and what do I have to invest in order to be able to put it behind me? And the answer to those questions are different in each case. It depends on how much money was involved is one, but it also comes down to the personality of the victim and the nature of the crime committed.
Absolutely. It gets to the point where you want to cut your losses. I mean, running a full investigation when it might not, or so it might do more harm than good. Obviously, because we talk quite a bit about the off-chain part of your work, but the complexity also comes because of the nature of the technology. Because as we all know, when there are multiple hubs in the picture, so the currency, the cryptos get moved around multiple wallets, that add complexity. Then we have bridges that add even more complexity. And finally, we have elements like mixers or privacy coin, Monero, Tornado Cash. Obviously, there are huge cases against them, but we know that when assets go through those entry points, even for you guys, even for experts like yourselves, it becomes almost impossible to do anything. So it's great what you said, that you keep the cost low in assessing if it makes sense or not to pursue.
But the other thing that I want to stress here is none of this should be taken as a reason to immediately give up and feel that you're never going to recover any crypto. It's not really the case at all. A lot of these gangs are very good at what they do. They spend a lot of time in planning and setting up the flow, how the flow of funds is going to run, how they're going to gain the confidence of their victims. But they're also nowhere near as smart as they think they are. And clues are often left, and we do end up face to face with the people who committed these frauds, and we do recover funds. There's absolutely never any promises at the outset of an investigation, but every single time I encourage the person on the other side of the desk to spend the initial effort at understanding the event and correctly assessing what the potential ways to try and recover would be. And then you can at least tell yourself, all right, I've made an informed decision to not proceed or to proceed, all right? And you can justify it afterwards. You can explain to yourself why you spent the money, why you spent the time. If you walk away without making an effort, it'll always hang over you. Like, why did I not at least give it a try?
Absolutely, I completely agree with you. As we are moving towards the end of the podcast, can you please give our listeners a couple of advices? One is what to be careful of, and I know that there is a ton of things that people should watch out from, but you have seen so many cases, so what are the main things that they should be keep in mind? But more importantly, can you also give us some advices on when things go wrong? So what are the first steps that they should take?
I mean, one advice we often hear is trust but verify, and then I think it's going to sound counterintuitive, But there's still too much trust in crypto, and there's too many assumptions going around the world of crypto and the world of Web3. The one piece of advice perhaps is to be a bit more, to be boring in that space. Dare ask the boring questions, and dare ask for the things that your grandma would perhaps ask for. So you tell me that this token is worth a specific something, and you tell me I'm going to be the only one with access to the funds. And ask the questions that might seem in the meeting might seem stupid, but ask them how do you know that, and prove that to me. How can I visualize why no one else would have access to these funds? I mean, this is the kind of stuff where there's a lot of assumptions going around. That should be expunged. Right? You should ask the obvious questions. The other thing is you shouldn't allow crypto special status. It's their assets and carriers of value, same as many other instruments, and they should be treated the way we treat other assets. There should be contracts. There should be screening. There should be KYC and due diligence. All these things that those of us who have also worked in traditional banking and traditional asset recovery, all of those things that sometimes in the crypto world are considered something we ideally want to leave behind and get it all up on blockchain and smart contract level. Let's keep those things around for a little bit longer. Let's dare be a bit conservative and bring back and dare bring with us a few of the meaningful tools that TradFi has used successfully to safeguard assets and provide meaningful protection.
I couldn't agree.
So I guess dare be a bit boring is the advice there.
I couldn't agree more with that. I mean, I know that the rhetoric is full disinformation and being free of doing whatever in the Web3 world, but the reality is in order to provide protection, some level of control and regulation, and I don't want to say control, let's call it regulation, is needed, and is needed for making sure particularly that the retail investors are protected. So no, thanks for emphasizing that. Is perfectly in line with the value of Semoto as well. This is why we are building a full community of vetted experts like yourself. Björn, thanks a lot. I mean, this has been a great podcast. What Current Consulting does is unique. You truly are a unique member of the Semoto ecosystem. We don't have anybody that can bring both those angles, not just investigation, but assessing who, and as you said, the risk element of it, the risk of who are we doing business with, the analysis of these companies, these players. That is extremely important to bring more credibility to the entire ecosystem. With more larger deals, with more acquisition of companies and consolidation in the blockchain space, company like yours are going to become more and more valuable. Once again, thanks for being a member of the Semoto ecosystem. Thanks for joining us today. For all our listeners, I'm going to post Björn profile. You can connect directly with him via Semoto. You can launch an RFP to get a quote directly from Björn. Are you going to be at any of the upcoming conference where people potentially can meet you directly, Björn?
Yeah, I'm heading down to Token 2049 in a couple of weeks. Right after that, I'll be spending a week in Kuala Lumpur. I'm giving a seminar on crypto fraud in Asia to the World Association of Detectives in Kuala Lumpur. If someone wants to see me there, I'd be happy to take a meeting. And I'll be at the